Good morning. Welcome to Stock Market Today. It's Tuesday, January 15th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Follow me on Twitter at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. And if you head over to chaikinanalytics.com/today, you can sign up for a free email, stock ideas delivered to your inbox every day. They're ideas to consider. You'll also be able to follow along with this show as I pull a lot of the content for this show from the building blocks of that email. So diving right in, U.S. equities were down in Monday's trading, but ended off their worst levels. Small caps and the NASDAQ led to the downside. Treasuries were mixed with some curve steepening. The dollar was down on the yen and sterling, but little changed against the euro. Gold finished up 10 basis points and oil was lower again, with WTI crude down 2.1% its second day in a row. Outperformers were financials, industrials, energy, and REITs, although the financials were the only group to finish higher. Underperformers, utilities, healthcare, tech, and materials. As we get to the desk this morning, S&P futures are up 10 basis points. European equity markets were mostly higher following gains in Asia overnight. Treasuries were mixed, with the curve steepening a little, with the curve actually flattening. The dollar is firmer on the major crosses. Gold down about 20 basis points. Oil's higher, up about 1.5% after that two-day pullback. So what does this all mean? Let's dive into the S&P 500. What I saw yesterday was a slight fade from resistance. Remember, we've marked resistance here in the 2600 to 2630 zone. Support 2520 to, and then 2500. But what I'm looking for here now is look for stocks which have strong relative strength. These are the names that have gone down less than the market or have actually gone up as the market's gone lower, because as the market tries to build a base here. If our base case scenario is that the market is building a base, is going to trade sideways here and then begin to move higher, the stocks that are likely to lead, stocks that are likely to lead are the ones that have held up the best during the downturn. So that's what we mean when we talk about looking for stocks with relative strength, and we'll look at a couple examples of that today. RSI does continue in bearish ranges, though, which is why I think we are going to get a pullback, and we want to monitor how stocks react during that pullback. Chaikin money flow is neutral to slightly positive here. When we roll it all up, the base case view is fade, pull back to test some of these support levels, see how stocks react, and look for the base building process. That's our scenario. The only concern that I have with that is that seems to be everybody's scenario. And as we said yesterday, we don't like to be with consensus, but right now I don't see much to kind of change that view other than that it is in fact consensus. Our market in a minute now. This is what I'm talking about in my note to Chaikin Analytics clients today. It's Tuesday. Tuesday is relative strength day. And we look at all the sectors and how they're performing on a relative basis against the S&P 500. Now, we've already touched on the S&P 500 fading slightly from resistance. Oil falls for a second day in a row. We'll take a look at that, where we could expect some support or should expect some support. Consumer staples leadership is waning. This is a group that we've liked. It's outperformed through the downturn, but now the intensity of that outperformance is starting to falter a bit. So we're going to back off that view. Materials, on the other hand, continue to improve. We're continuing to watch there to see if it makes sense to become constructive. I don't think so yet, but it is turning a corner. It's less bad is probably the best way to think about it right now. Futures do point to a slightly higher open, as I said. Now, our Chaikin power bars for the major indexes saw some deterioration yesterday. Dow down 42 basis points. One bullish stock, 8 bearish or very bearish stocks. S&P 500, 37 bulls to 134 bears. NASDAQ, 9 bullish or very bullish stocks, 23 bearish or very bearish stocks. We can see that NASDAQ underperformance down 90 bips against the S&P down 64. Same with small caps, down 97 basis points on the day, 208 bulls, 472 bears. Downtick in Bonson, yield slightly higher. And according to the Chaikin power bar, small cap stocks and large cap stocks are bearish. Our stock of the day now. Stock is auto-generated by our algorithm, and it's for you to consider should everything line up and meet your parameters for entering a long idea. Broadcom is the stock of the day. Ticker symbol AVGO has a very bullish Chaikin power gauge rating. Closed at 250.87 yesterday, up 12 basis points, so an outperformer and a down tape. Chaikin power gauge rating for Broadcom is very bullish due to very strong earnings performance, very strong price volume activity, positive expert activity. Financial metrics are a little bit dodgy, But when we roll up the 20 factors within these 4 categories, we come out with this very bullish rating. So we have a very bullish rating, strong trend, but a weak industry group. Semiconductors, we're watching them closely. They're still weak. They're starting to stabilize on a relative basis. But still, again, we want to start to think about the names that have held up the best. And Avago kind of fits that bill. Very bullish stock. Here's the ribbon at the bottom of the screen. Shows us we are on that very bullish rating. And the stock's been outperforming since, call it mid-November. So market and model are in agreement here. Dynamic Duo are in gear. You can see that the stock is trading in a bit of a range, rounding out of an oversold condition, not quite overbought just yet, but the money flow kind of gives me pause. I think in this tape, if we're expecting, with the market's overbought and we're kind of expecting a pullback, I think you can wait. I want to add Avago to a bullish watch list. Keep an eye on it. And when the situation makes sense, potentially think about it as a long idea. I'm just not there yet, but that's more market-based. But these are the types of names that I'm talking about. Stock has held up and begun to outperform as the market's kind of gone down since September. Right? Market started to head lower around the September-October timeframe. Avago is flat in that timeframe. So it's an outperformer. It's been holding up. Type of name you want to think about as you're building your watch list of names that are potential long ideas when the market stabilizes and begins to move higher. Avago should be on that list. Your sector tracker now, movement of the major sectors over the last 5 days. Industrials, REITs, and energy are their top 3. Utilities are the only group that's down. I will point out for the utilities that PCG, which is filing for bankruptcy, is a member of the S&P 500 Utilities Index. I checked the data this morning, and as of last week, it had about a 1.3% weight. So not a huge weight, but also not insignificant when you consider the stock is down about 83% from its recent high as it's filing for bankruptcy. Stock is down around 8 and change from 49 and change at its recent high before it began to roll over. So that is weighing on the utilities group. Staples, as I said, starting to break down. Healthcare is one we're watching. We've loved healthcare. We've been uber bearish on healthcare. We're not changing that view just yet, but we are seeing some signs that the trend could be reversing. For now, we're sticking with it, but we're watching it closely. Not going to remain dogmatic in our view there. Watch the financials today. JP Morgan reported this morning, and their earnings missed expectations. Our industry in focus today, software and services, which over the past 6 months has underperformed the S&P 500 by 61 basis points. Power bar, which measures future potential, is weak as it has 15 bullish or very bullish stocks and 27 bearish or very bearish stocks. But what I will say is that even with this weak ratio, it's still ranked number 4 of the 21 subsectors that we look at. Down 1 slot over the past week. My point here is that there are actually some good names in the software and services group. Look for the names that have been holding up on a relative basis. The relative outperformers with bullish and very bullish ratings are likely to be your leaders coming out as the market bases and begins to move higher, if that does in fact play out. Some of the indicative names in the group that are very bearish that we want to avoid: Ring Central, RNG, Square, SQ, and Everbridge, EVBG. Let's look at Everbridge. Let's look at Square here today. Square, ticker symbol SQ, closes at 65.18, down 1.59% yesterday, so underperforms the down tape. Very bearish stock, weak trend. Ribbon at the bottom of the screen here shows us that we've been on this bearish rating since early to mid-October, and then in early November, the stock begins to decline, underperform the market. So market and model are in agreement, dynamic duo in gear to the downside. On top of that, stock is overbought. Money flow, let's call it neutral, starting to tick to the upside, but we've been seeing some bouts of intense bearish readings there. Stock is below the declining long-term trend line. I think this is the type of name you want to avoid. If you're aggressive and want to play for some downside here with the market overbought and the stock overbought, I can't argue with that thought process. As the stock is towards the upper volatility band, it's overbought. It's very bearish below the trend line. So if you do trade options and want to look at put options on Square or bearish vertical put spreads, I can't argue with that logic. But at the very least, Square is not a name that we want to own. Trending now, yesterday's S&P 500 gainers and losers. Citigroup up following their earnings report. Goodyear Tire, didn't see any real news to send that stock up by 2.75%. STT up 2% as they caught an upgrade. Cabot COG up nearly 2% on an initiation, and XEC up nearly 2%. Didn't see any news to drive the move in that stock. PCG, we mentioned it, down 52%. They're filing for bankruptcy. Newmont Mining down nearly 9% as they announced that they are going to buy Gold Corp. Western Digital catches a downgrade to send that stock down nearly 5%. Win down nearly 5%. DOJ putting some restrictions on online gambling. That could be playing into it as well. A lot of the Macau-levered gaming names were down yesterday. Corvo down nearly 4%. Didn't see any real news to drive the action in that stock. So let's dive in. WTI down for a second day in a row. So we faded at the 50-day moving average. And now what we had was broken support. Let's see if this becomes support or if we're going to slice right through it. I think we're likely going to retest the lows down here around $42. And the reason for that rationale is, number one, even with this strong move higher, RSI could not get out of bearish ranges, is now beginning to roll over again, and shaking money flow for the commodity is bearish. Oil is below the 50-day moving average, below the 200-day moving average, both of which are declining. But we do have some support just below this level. Wide range of support, call it 42 to 50. I know it's not precise, but that's what the market is giving us right now. Would not be surprised to see a test of the lower end of that range. Strength in staples is waning. Here's XLP relative to SPY, consumer staples relative to the S&P 500. Had a nice breakout, couple of retests, and now we've broken down. Now, we are still above the 200-day moving average, but what bothers me is this series of lower highs by the RSI, and on an absolute basis, staples failed to break out and then turn lower with the rest of the market. Now, it did outperform. It outperformed from September, until the end of the year. So it did its job as a defensive group, and we highlighted it often. We said, look for long ideas in that group for outperformance. So, we feel good about that call, and now we're going to back off of it. This breakdown here bothers me, especially because it's confirming a series of negative divergences in the RSI. Wouldn't be surprised to see us pull back, retest this 200-day moving average, and then we'll see if it makes sense to reevaluate that view. But for now, staples moves to a neutral on a relative basis. Materials, on the other hand, showing signs of relative strength. XLB relative to SPY, so materials relative to the S&P 500. This near-term downtrend has been broken. Now, contrast that with what we saw in staples, right? RSI waning. What do we see here? RSI moving towards bullish ranges potentially. Didn't become oversold with this last downturn. Moving higher, back above 50, below the 200-day moving average. So that's what I mean when we're not getting super excited just yet, but it is something we're keeping an eye on. This is why we kind of publish our notes the way we do. Every week on a different day, it's the same topic. This allows us to see changes that are happening in real time and to react to them quickly if we think that they are sustainable. So something that we're watching here is potential outperformance of materials. I think it's a function of a weakening dollar. So that's obviously something we'll keep an eye on soon. And what we mean by stocks with relative strength, my stock of the day today is Argo Group. Very bullish stock, strong trend, strong industry group. Very bullish stock, outperforming the market. The market's been going down since September. This stock is going up above a rising long-term trend line, bullish money flow, type of name you want to consider adding when it becomes oversold. Because as the market bases and stabilizes and then begins to move higher, this is the type of name that is likely to be leadership. It's why relative strength is so important as part of our process and the work that we do every day. So I implore you, look for names with relative strength as you're building your list of names to consider on the long idea on the long side when the time is right. So that's it. Daily stock ideas for free. If you head over to chaikinanalytics.com/TV, today, and sign up for the email. And if you like what you're hearing, help us spread the word. Share our link on social media. I'll see you back here tomorrow.